वेलकम टू यदन्या इन्वेस्टमेंट एकेडमी। सो आज हम देखेंगे सेकेंड पार्ट ऑफ प्राज इंडस्ट्रीज का डिटेल्ड एनालिसिस जो हमने किया था। फर्स्ट पार्ट में हमने कवर किया था एंटरप्राइज एंड इंडस्ट्री। आज हम देखेंगे गवर्नेंस, फाइनेंशियल्स एंड वैल्यूएशंस कंपनी के कैसे हैं। सो 5G एनालिसिस फ्रेमवर्क में हम इक्वली वेटेज देते हैं हर पैरामीटर को टू अंडरस्टैंड कि हाउ एग्जैक्टली द कंपनी इज। गवर्नेंस एंड फाइनेंशियल्स तो उतने ही इंपॉर्टेंट है जितने इंडस्ट्री और एंटरप्राइज इंपॉर्टेंट थे। तो उसी तरीके से हम आगे जाते वक्त देखते हैं कि हाउ इज द गवर्नेंस ऑफ द कंपनी। So if we look at the governance, the company was started by Dr. Pramod Chaudhary, and he is an IIT Bombay alumnus as well as a Harvard alumnus. So with a strong qualification, educational qualification and a first generation entrepreneur, the company was started by Mr. Pramod Chaudhary. So along with Dr. Pramod Chaudhary, the key managerial personnels of Praj Industries are Shishir Joshipura, who is the CEO, and Sachin Raole, who is the CFO of the company. So let's look at a brief profile of the key managerial personnels. Dr. Pramod Chaudhary is, as I said, is a alumnus of the IIT Bombay as well as Harvard Business School. Mr. Shishir Joshipura is the CEO and he was recently inducted in 2018. Since 2018, we could quantify the changes which have been made by him. Since 2018, we can actually see how the company has developed its top line as well as the bottom line, keeping intact the margins, and the change in the management can actually be quantified in the stock price of the company. Going forward, we will have to look at the remuneration which the company pays to these key managerial personnels and then compare those with the top line of the company to understand the significance of the remuneration as a percentage of sales. So as we can see, Dr. Pramod Chaudhary is getting just 0.36% of the total top line of Praj Industries. On the other hand, Mr. Shishir Joshipura is receiving 0.25%. So that is a very decent number. The upper limit for key managerial personnel is 10% of total sales. Also, Mr. Sachin Raole is receiving 0.10% of the total sales done by the company. So if we look at in an analytical view here, the remuneration is very decent and the company is not giving an extraordinary amount of money to the key managerial personnel of the company. We will also have to look at the employee reviews of Praj Industries to understand how the ex-employees or the current employees of the company feel about the workplace environment, the culture, the pay rules and other parameters which are important for the governance of the company. So Ambition Box has rated it as a 4.1 starred company with a review of 269 plus employees. The company is doing well in this parameter. Looking at the shareholding pattern, the promoters have maintained its shareholding at 33%, which is quite a bit low for a small cap company, but they have maintained it consistently. So that is also important for us to notice that the shareholding is low, but it is consistent. So the institutional holding as a percentage of free float available in the market is decent, but not very high, which we would like. If the institutional holding is high in any company, that shows the governance and the confidence that the institutional investors have in the company. Moving on to the financials, how is the company doing on the financial front? So as we see, the policy change made by the government in this particular industry has impacted sales of everyone in the value chain, involved in the value chain of sugar industry. In the similar way, the Praj Industries has been able to replicate what the sugar industry has been experiencing, and in line with that, a boost to ethanol has given a boost to top line of Praj Industries. As we see, the margins of this company have been typically low for quite a bit time, and the 8 to 6% margin is a very thin line. So the margin of a single digit or a lower single digit has a great impact on the revenue on the financial front of the company. So when the margins are that low, like 8% is the EBITDA margin and 6% is the net profit margin, any wrong decision can lead to catastrophic effect on the bottom line of the company. So why is this so? So the reason for this is basically the raw material or the input cost. So previously the company was maintaining that if any order book is if the order book is increased by, say, if I get an order of 100 crores and the company's internal calculations are that the raw material will be procured for so and so crores, but due to the commodity cycle, the uptrend in the commodity cycle and the price pressure in the commodities, and the demand increased in the commodities, led to the increase of steel. So now steel is a raw material which Praj Industries need, and the steel prices were increased drastically, and that impacted the margins of Praj. And due to absence of variable pricing in the contracts, the Praj was not able to pass it on to its end customers. So to tackle this, the company has now started mentioning the variable pricing clause, and now the impact of this can be seen in the Q2 from the Q2 of FY23, and the company's management maintains that the variable pricing will allow it to maintain the margin between lower double digit or a mid double digit number going forward. When we see the revenue breakup of the company, we understand that the bioenergy segment has been contributing to the company's top line significantly. It is around 70% of the total top line. If we look at the trend of past 5 to 6 years, we understand that the high purity business has not been able to pick up, but the engineering segment and the bioenergy segment have relatively done very well. The bioenergy segment has been exceptional with regards to the total top line contribution by it, and it is expected to grow in a similar fashion in the coming years. I also bring you to the notice that the 467 crores from the engineering segment is majority from the exports which the company has done. So the company has mentioned that around 80% plus percent of its engineering segment comes from the exports which the company does. So now we know that the exports are majorly contributed by the engineering segment and a bit by the bioenergy segment. We know that the bioenergy is dependent on the domestic markets rather than the international markets. So when we say that the company is into global exports, we have to understand that so it is not the bioenergy segment but the engineering segment which is doing that work for the company. So if we look at it an industrial view which we mentioned before, so the target market for Praj is into the domestic markets of the bioenergy segment rather than international. Going forward, we look at the order book of the company. The order book of the company has been growing significantly since the fall of Q3 FY20. That is, after pandemic, the company has been just going in an upward trend with respect to its order book. So what is an order book? Order book is nothing but the projects which are coming to contribute to its top line, but it won't be recognized as a revenue. Instead, it will be kept in the process of so for one project to get completed, it requires around 18 months. So जब 18 मंथ्स की बात है तो परसेंटेज कंप्लीशन बेसिस पे कंपनी इस ऑर्डर बुक को रिकॉग्नाइज करेगी जितना परसेंटेज वो प्रोजेक्ट का कंप्लीट हुआ है. सो फॉर एग्जांपल, इफ आई गेट एन ऑर्डर ऑफ 100 crores and only 20% of it is completed, I will recognize only 20 crores in my top line. So in a similar fashion, the order book seems to be increasing every passing quarter, and that will be recognized over the next period of 18 to 20 months in the top line of the company as and when the projects are completed. The exports of the company are typically from non-bioenergy segments, and that's why the exports are typically low relative to the domestic sales, and the domestic sales mainly consist of bioenergy. The company has also mentioned that the brewery segment is not picking up due to the pandemic, and now that the pandemic has reduced, eventually the tourism industry will impact the consumption of breweries, that beverages, that means the beer and alcoholic products. So the company has mentioned that as and when the hospitality and tourism segments pick up, the consumption of beer will increase, and hence it will create demands for breweries, setting up of new greenfield projects or brownfield projects, that is the expansion of the current capacity of breweries. Now we look at a very interesting point which we have come across while analyzing Praj. So the debtor days and the inventory days have been efficiently managed by Praj over a period of time. How is this important? Because when I have a efficient working capital, the returns on the invested capital increases. So an efficient working capital management leads to a efficient capital allocation as well as lesser requirement of capital in the future, and a greater availability of capital for any capex to be done in the future. Now when a company is debt free and is efficiently managing its working capital cycle, that means the return on equity will increase eventually. So an efficiently managed working capital will lead to an increase in return on capital employed. So as we see, the return on capital employed has increased over a period of time, and after pandemic it has just shot up from just mere 7% to 24%. It is also due to lower sales, but you also need to understand that the efficiency in working capital management or efficiency in capital allocation will in the long run will impact the ROCE as well as the ROE of the company. As the company is debt free, the ROE as well as ROCE will increase in a similar fashion, in a similar growth rate. So now we look at an interesting point of the R&D expenditure done by the company. We have talked much about how the company has done come up with various technologies, various products, innovative products in the Praj metrics. We also need to look at how much the company had invested in this and how is the return on it. So the company, it's a good news for the investors. So the company has invested mere 1% of its top line in the past 6 years. As we can see here, there is a revenue expenditure and there is a capital expenditure. So what's the difference between these? But both are the research and development expenditures. So what is the difference between a revenue and capital expenditure? Is nothing but the research the money which I put in for a particular research, if it fructifies me in a long term and it can be said it can be capitalized, I will use it as a capital expenditure. If not, then I will have to book a loss in my P&L and then say it as a revenue expenditure which has not fructified. So here the company has kept its R&D expenditure as low as 21 crores in 2021, whereas the top line was much higher. And in this way we understand that the company is technological based company. It's not an asset heavy company, but it is a contract based company. So the company is not an asset heavy company. Looking at the valuations here, when the policy changed, everyone in the market started noticing that which company will be most beneficial, and the sugar sector in this case scenario was on the receiving end of the demand, and hence the sugar companies as well as Praj Industries, which is related to the sugar company, increased its prices. So we can see the impact of policy change. It is almost 8x. So from a low of some 40 or 50 odd rupees, the price has moved today to 350, 360 levels, and that is something which we need to focus, that how was the median PE and at what valuations does the company is the company trading right now. So the company is trading at around valuations of 40 to 50 PE, which is high, but historically if we see, the company was trading even at these levels before the policy change and before the pandemic. So what does this say us? Maybe the median PE of the company is at par with the current valuations. With the growth rate expected in this company, the valuations will be higher, on a higher side. For the investors, you need to look whether you are able to handle this kind of risk, and you want the you want stocks with higher valuations in your portfolio. So while looking at the valuation parameters, we also look at at EV by EBITDA and the price to book ratio. Here the EV by EBITDA is around 25 to 30. In the range is 25 to 30, which is pretty much higher, on a higher side, and the price to book value right now is around 7 to 8. 7 to 8. So on both the fronts the company is faring pretty much high, and the valuations look a bit on a higher side. That's why the riskiness of this stock and the correct probability that the stock might correct in the future is high. Historically the price to book has been on a lower side, whereas the EV by EBITDA has been increasing as the company has to deliver a great set of results to maintain this prices and bring it on a lower side, or the prices need to correct, the stock prices needs to correct to bring it to a lower side. So either of them is possible, and the investors believing in this company will always hope that the company performs better and the valuations come a bit on a lower side. So that was it from our side. Do comment your thoughts in the comment section and tell us about how did you like about the detailed analysis of this stock. That was it from my side, guys. Thank you.